Hello, 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 everyone. Happy GDP Wednesday. How's everyone doing? Good morning, Sterling. More news confirming inflation is heading higher, not lower. Yeah, the Q4 PCE rose 3%, excluding estimates of 2.8. Got bumped up. What else? Bitcoin keeps going. Bitcoin just keeps going. It's almost to the next target. Uh, Dollar strengthening a bit. Yeah, good morning, John. Hey, Patrick. So we have I'll go through the GDP information. Thank you for putting it in here. What's Fed Logan? We need to disconnect idea of slower runoff pace and ending QT. Huh. And mortgage rates are up again. At what point do you acknowledge the Federal Reserve, is in the current form, is a failed experiment? Jim Iorio. I completely agree. I've been saying get rid of the Fed for years. It's not recently. I've been talking about that since the late 90s. Well, it's just doesn't matter though. Nobody asked me what I think. Okay. Again, thank you for tuning in, everybody. We have the GDP, and this was the second revised estimate for Q4. So this is backwards looking, but it was revised slightly lower from last time, 3.3 down to 3.2. GDP price index revised up. Core PCE revised up. GDP sales revised up. PCE prices revised up. Real consumer spending revised up, which can keep inflation going. So we're going to have to see how the more recent, sorry about the background noise there. We're going to see how the more recent PCE numbers come out tomorrow. Remember, they come out tomorrow morning. Very important with the personal spending and jobless claims. But tomorrow is going to be a very big day. What do we have left today? We have the EIA numbers for all you crude traders and energy traders. And then we got Bostic, Collins, and Williams speaking. So we got some more Fed speak. What else do we have? Keep in mind, remember, tomorrow we could see some volatility with these PCEs are more pertinent and more important because these are the PCEs not backwards looking for Q4, but these are the ones from January. So keep that in mind. The pre-market map is pretty red, but coming back a bit, a little waning downward momentum. Tesla's still up, pumping the Roadster again, saying it's going to come out next year. So far, we have only real estate and utilities barely up, but pretty much everything's neutral to down, with comm services leading the biggest pullback. Fed Watch tool still has 3 cuts this year. So that's not changed much. We're going to have to see if that changes tomorrow morning. Fear and greed still in extreme greed, even with this pullback. Let me refresh this one more time. Just double check the app. So, closed in extreme greed. By the way, advanced auto parts, miss, but gapping up. It still has a final target in the double. But it's interesting. It was a little stronger going up pre-market. Now it looks to open right around its 200. I'm going to be watching where it closes today in relation to the 200. Simple moving average. Salesforce, Snowflake, AMC after the close, Paramount. But that's really about it. Tomorrow morning, Best Buy. It'll be interesting to see what they say with the consumer. So, who else is here? Hey, Charles. Good morning. Hey, good morning, Mark. So, is the pullback over? Well, we've hit the first little area. We've hit the 8 EMA and a very key support area. So I'm going to be watching to see if these pre-market lows hold about 50.63 to right around 50.56. Worst case is 50.50 for me coming in. I'm going to be watching for that area to hold and then to see if we get a stronger bottoming pattern. So far, we have a little waning momentum with a flag. Now I'm going to be watching to see if we roll over into the open with a little selling pressure, break down, and then make a stronger bottoming pattern somewhere around this current range. Really 50.57 to that 50.63, 64 area. That's what I'm watching for. In order for me to get more bullish, besides if it breaks really above 50.79 in the short term, and then has to follow through above 50.90. 50.90 is very key. Other than that, we've been in some very choppy price action recently. So far, just a standard pullback straight to the rotation zone after, at the top of the rotation zone after, again, we've been on a major tear. You have the weekly. I mean, we're still very overextended, and the weeklies still are headed down, but this isn't a big pullback with cycles going down on the weekly so far. This is a pretty normal correction. So going to still be watching once we do bounce for that secondary reaction and then see if we put in a more significant topping pattern. But it's still there. The trend, although the medium and short-term trend we're still up. And we're in a little pullback right now, but the overall trend, because we haven't even broken the rotation yet, is still up, the rotation zone. Good morning, Heinrich. NASDAQ's pretty much the same story, although this is more of a sideways correction so far. Little pressure on the market this morning. We still have the bigger double top potentially in play, but a long way off from triggering. Entering a very key area. I'm now focused on the NASDAQ about the 17,894 to 17,900 going into the open on any pullback. It's got to start getting roughly about 17,950 before looking for at least a short-term bounce and then follow through above 18,020 to be exact. So that's what I'm looking at there. We'll be watching really to watch if this 17,892 to 17,900 holds into the open. If not, 17,855 and then about 17,758 are the next key levels lower. Keep in mind the 17,758 not only being the 50% harmonic from this last run-up is the bottom of the daily rotation zone. Hello, Christoph. Was going to ask if that was a double. Yes, it is a double. This is a valid potential double. Why do we call it potential? Because it may never even confirm or trigger. All right, it's just something to notice, so that's good for, your more medium-term positions. Hey, we could get, if that were to trigger, we could get a bigger pullback. The Dow, finishing the double yesterday. See, coming down, hitting that target, bouncing up, and then, remember, they don't have to end there. That is a key stopping point, and then you get to decide if you want to keep rotating it down with new entries, like rotation zone entries or something else. But it's leaning against some very key support area. You see this little mini double top from before is now tested right here, and it's the 37.5 retracement harmonic, 38,875. So this is a very key area. If we do continue pressure and have a bigger breakdown in the Dow, it'd be 38,719, 38,720 areas. The next very strong area of support. The Dow, besides potentially bouncing, it's really got to start getting above 39,000 to sustain a bullish move up from my perspective. The Russell, not much to talk about here. There's been a lot of short squeeze in the Russell recently. Has not been able to get through the prior high area back from Thursday the 15th. So going to see if it's running out of momentum, and that was right next at 87.5. Just missed that by a hair. But other than that, there's nothing besides their key support still coming in about 2031 and key resistance about 2068. There's not some great setups in the Russell right now. Remember, don't force trading in markets that don't have good setups. Either if that's the only market you trade, there's times that sitting on your hands is the best trade, because no trade is a trade. And then otherwise, if you trade multiple markets, find something that there are good setups in. If there aren't, then you sit on your hands. But like, for example, the S&P and NASDAQ have much better setups than the Russell. And yesterday, the Dow had a good pullback setup with the little mini double top. Other than that, VIX slightly elevated. Still going to watch. In order for it to get more choppy bearish, it has to start staying above 1375 for me to start getting more bullish, it's got to get below at least 1340, and I'll really be watching 1335. The DAX getting overextended, very overbought with cycles at the top. Remember, last time was a little pause and then breakout. We're not yet to the next harmonic. One of the things you should note when it fails before it gets to the next harmonic, and that doesn't have to get here today or tomorrow, it could easily pull back to the rotation zone and then rotate back up. But if it has a bigger failure, then it's a very tired market, and this is getting into a tired market. You see here weeklies. We could be, we're definitely running lower on momentum, but weekly cycles are getting to a very top area, so I would not ignore this 17,700 area for any DAX traders. The notes, these will move more after tomorrow morning's data. There's not much reaction off the GDP and Q4 PCE numbers, but the notes are still in the short-term downtrend with the triggered double top. They've really stalled out at that first target area, but they're still on any bumps. They just keep rolling over. And the yields consolidating so far, a sideways consolidation, trying to edge up a bit. So back on Monday, we formed a higher low compared to Thursday the 15th. But I'm going to be watching in the short term, especially tomorrow morning, about 4.31. Remember, the first target is 4.395. 10-2s bouncing up there. Bouncing up after completing that double rather nicely. Bouncing up, but nothing else to talk about. Dollar index, little quick reversal coming in. Little short term against the trend, triggered double top on the 15-minute. So we'll see if that plays out at all. That could possibly take it back to the prior support area. Little pop, but dollar's really trying to put in some kind of a bottoming formation here. Bottoming formation, but again, if this cannot be sustained and we break back below 103.20 at this point, the run in the dollar could be over for the time being. Crude. Yesterday, look at I want to switch to a closing chart just to show you. Line on close. Yesterday, highest close since back in November, early November. Remember, closing is the most important bar there is, the closing price. So, and then today's following through, chipping away. We talked about it, chipping away, making some higher lows, catching on the rotation zone, and now trying to break out. Next target is 80 still. It's really got to follow through today with a close, especially as a close above 79.30 would be very good for the bull case. All right, and it's still in the channeling pattern. Natty gas triggered the double yesterday, so it broke, confirming it, and then officially triggered it, stalling out so far at the rotation zone. This is where you have to be nimble when trading against the rotation zone. This would definitely be, even though it didn't quite get to that 189, 190 area, because it's against the rotation zone, if you're learning how to trade these, this is an area I definitely raise the stop a little early. Okay? Can't give you specific trading advice, but that's how I look at these. When it's coming against the rotation zone right there, doesn't mean it has to stop. It is definitely an area to take some risk off the table. Gold, still nothing. Gold is trying to make a slight base higher, but watch the close above 2050.7 in the short term. Silver, again, still no official. Invalidation of the pattern, or as you could say, a stop out if it was an entered trade, because it has to close below 22.52.5 or trade below 22.34.5. It did not do either. Yesterday closed at 22.53. The prior day closed at 22.52.5. It has to close below the level, not at the level. Now, what's interesting is got back to cycle bottoms. cycle bottom. So we will see if this can actually sustain another push higher. Where else do we sit? We have the yen trying to still base, right? This about 150.80 is very key because you get through 150.80, we could see a very quick pop to about 151.40. Other than that, the double's getting extended, but it's still valid, the potential double. Euro, little bounce after the revised GDP numbers came out, but still, I'll get again more bearish. Should we start closing above 108.60 on the euro, or I'll get bearish on the dollar. I'll get more bullish on the euro, or if the euros then turns around and closes back 108, then I'll get more bullish on the dollar, bearish on the euro. Spiders. Let's see who's here first. Hey, Kalani. Figured you'd tune in with Bitcoin marching. Bitcoin marching. So, spiders, we still have the little flagging gap down today. 505.31. So on any rally, the first target is about 506.93. 506.90. It's really got above the immediate resistance going in after the open is 505.99. So that was the first target I would personally utilize on any bounce up. Yesterday's low, 504.75. So that's the first area, and then the major support right now is coming in at 503.90 to 504. So those are all the levels here that I'm keeping an eye on. If it gets above, once we get above, and I don't think it'll happen today if it did do the gap fill, but the next target up is back at a 508. The Qs were 435.62. So for the gap fill, you'd be looking to 437.60 on any bullish case, which is just above yesterday's low. So that's the area I'd watch. The key support is still 435. So on any pullback, 435, if it breaks below there, 434.50. A major line in the sand is the low from the 22nd of February, coming in at 433.71. We start breaking below that, my target would be 431.11. So that's where that stands right now. Let's get to the good old Bitcoin. Good old Bitcoin. Remember, the probability shifted back on the 12th, and since that, running higher. Next key target still 62.3, trading 64.80. So that's really where it stands right now. We need another pausing bar to really get to the next key target area above that 62.3. If I was looking at it to put something on the chart, it's about 65.6 is the next key target area. I'll put a line up there. All right, so there's your areas. The upside, the pullback level is now the old harmonic with the rising daily rotation zone, about 55.6. That's key on any pullback. Those, what do you do much options premium selling? If so, do you do more for profit or hedging stock positions, or both? Again, I do more premium selling, especially when volatility is pumped, whether it be in a specific stock or in the market. I do not like selling a lot of premium when volatility is low. I'd rather spread out. If volatility is low, I prefer spreads. Anything where you're neutralizing or more neutralizing the volatility effect, especially due to spikes. So I want to offset the volatility when volatility is low. So you can, and there's lots of ways you can do those. You can use, anything that offsets, like butterflies, condors, just bull or bear spreads. But when volatility is high, that's when I like to take in premium, because even if, remember, you can have an adverse move. Like, people are shocked. Like, they'll buy a call going into earnings. So I'm just giving an example with a volatility pumped. Like, let's just say it's NVIDIA. And the market will move in their direction. but they won't make much on the call or even lose money on the call because volatility comes crashing down after the event. So even though they were right, they overpaid due to volatility. I'd rather be selling the volatility and taking the collapse in volatility, because even if you're wrong or slightly wrong, you can still a lot of times get out of the position or even make some money getting out of the position. And or when volatility is pumped on things, let's say you have long-term holdings, I really love covered call positions if I want to keep it long term and volatility is really pumped, because I can always roll a call. Also, if you sell and the market keeps going, you can, if volatility starts coming in, you can always roll the call. So keep that in mind. Hope that made sense. Which analysts, Mark, are those analysts are a complete scam? Which analysts are you referring to? I don't like stock analysts, by the way. Good morning, Legion Reaver. Thank you for tuning in. To be a little more specific so I have context. Tesla. So, and the Roadster pump hasn't done much yet, but it did hit the first target of the inverse head and shoulders. Remember, the very key magnet, if this is going to stall out, is the 208 area. We're still. Now, if with this little bounce, besides raising a stop, if you're trying to trade this from the long side, if it starts breaking, especially closes back below 191, would personally, we have the downward, remember, hitting the first target, little flag channel bounce, I'm still watching for the next rollover play. NVIDIA, still pressure on NVIDIA, but we have the rising rotation zone coming in, converging with about the 760 area. So I'll be watching for the, again, not necessarily today, but a bounce play and the secondary reaction to possibly put in a stronger topping pattern. Mike, when looking at volatility term structure, I'm watching the relationship between the day's expiration and the monthly expiration. Is this the right way to... Well, again, you have all the dailies. I like to look at it more with the weeklies and the monthlies, to see how they react, because the dailies can fly around a little too much. But if you can start by refining it, looking at the dailies. Will the U.S. Japanese yen hit 151.8? I'm thinking it will, but just because I'm thinking it will, let me get back to that yen. It doesn't matter what I think. Will it hit 151.8? I have about 151.40 is very, very key. So that's the area I'm watching. There's a ton of resistance up there. At 151.70, 151.8 is a very strong target. So that's a little over. I would definitely be looking at about 151.40. Personally, let's just see where Advanced Auto Parts is. Again, you're holding right against the 200 here. It roughly hit the first and second target, little mini double top, pulled back, held that key. We looked at this the other day because that 60.20 was a very key area. Did not get below it and closed above. Oh, they went, sorry, it was, before earnings was a miss, but I was wrong. I thought I saw a miss, but it was a beat on earnings, a miss on revenue. Now, miss on revenue is still surprising to me or concerning to me, because that's the one I would rather have beat between the two. But watch today how that closes against the 200. All right, what else do we have? What else do we have in the Google still holding the very key level we talked about yesterday? Nothing's really changed with them. Amazon still has the potential double top in place. May never trigger, but it's something against the 87.5. So this is very key, because if you start getting things like that, if you have Google break that key support, Amazon potentially triggered a double. Meta isn't really doing anything yet. I'm still watching the breakdown. We were in sort of a messy ascending triangle. The warning sign would be a close below this trend line. But the real breakdown is 454. We're a long way off from that. What other things do we have? I'm just keeping an eye on what was leading the market higher. Microsoft, we have an inverse head and shoulders. That would trigger on a closed blow about 397. So if that were to trigger, I'd start watching for it again. We'd have an issue with a lot of these key stocks that have led the run up rolling over. Apple, still look at the very key support. Still has not triggered this double. It's confirmed it multiple times, not triggered it. Still needs a close. I just go with a close below 180 at this point. But these are some key things. Even if you don't trade them, they can help giving insight. Netflix, by the way, still chugging on. Netflix still chugging on. Remember, the next magnetic target price is still, and you have, if you raise it, so we have the back from the, this is the long-term one, back from Friday the 6th of May of 22 to the most recent pausing area. Then you got the pullback into the rotation zone, still moving on up in the short term, and we now have a major cluster up here. A major cluster around 631. So Netflix is still in at least bullish mode. What would really concern me with Netflix is if we break back below 538. Going into the open, let's just peek at this with the S&P. With the S&P really going into the open now, it's going to be the range on watch is about 550.78 to about 50.68 are key support resistance. Now it's trying to still stair step higher in the flagging pattern, but it's really got to now eke out a new high, or I'll be watching for a new short-term high. I'll be watching for again, a choppier market, minus 800. So a moderately weak tick opening, but so we have a weak tick opening with still holding this little support area. So if the tick rolls over and we start breaking this 50.68, I'll watch for the low retest of the European post-open lows. Other than that, still, and only if that breaks can I then get more significantly bearish, at least for today. Other than that, with especially the numbers coming out today, it's going to be, I'm going to lead to the choppier side again, at least for the U.S. session, unless I see something change. What's my favorite vol measure? Well, the real one I look at is just implied volatility. What's my favorite vol measure? I mean, are you just talking standard volatility? I'd always just look at the implied volatility and how it's reacting, where it's trending short term and long term. I don't really use historical volatility, besides getting a very long term baseline of where stuff is. I look at short term volatility, and I really like to focus on the weeklies and monthlies, not the dailies. All right, that's where we sit right now. Thank you for tuning in, everyone. I got to run now. We also got a home inspection today, so, hopefully keep your fingers crossed that everything goes smoothly. If you'd like, I'd appreciate it, and I'll see everyone tomorrow. Bye for now.